What's up, YouTube? Welcome to another exciting video. In today's video, I just thought I'd give a little bit of market commentary. I just published a post about, will rising rates pop the debt bubble? And I just wanted to there's so much going on right now. I just thought I'd shoot a little video. This is going to be a short one today. Look at some coins and discuss some finance. Quick disclaimer. I'm not a financial advisor. The channel's for entertainment purposes only, so please do your own research before making any investment decision like buying gold, silver, following any of the strategies I discuss on the channel. I'm a terrible investor, and this is purely for entertainment. Okay, so I see we got a 75 basis point rate rise there yesterday. The Jerome Powell came through, and they hiked rate. His language was he wants to be the new Volcker. He said this is kind of a new Volcker era. There might be another 75 in July, and so on. He'll do whatever it takes to tame the inflation beast, and all that good stuff. So of course we've been in anticipation of that. There's a big sell-off Monday. Tuesday wasn't much better. Yesterday a bit of a rally after the meeting, and today the more carnage on the markets. Gold and silver are holding up extremely well given the backdrop. So that just tells me that there's bigger things at play. And two of the most notable ones I would say is what's going on with the Japanese yen and the train wreck of a news conference that ECB President Christine Lagarde had last week, saying, she's basically the balance sheet in due course. We kept hearing it. They'll just reduce itself. How is Europe going to raise interest rates and pare back QE when the Italian debt market will explode or implode? Greek, Spain, and so on. We've seen a similar thing sort of at work in Japan. The Japanese central bank, they're defending the 0.25% yield on their Japanese government bonds. So what's going on? The yen is collapsing. A strong dollar, the euro's crashing, the yen's crashing. So there's real damage that's happening. Markets are collapsing, real estate. None of this is great. Even bonds, even U.S. Treasuries, and everything is tanking. So what are we going to do in this sort of environment? The inflation. Inflation is not moderating. It's still running pretty high. Now there's kind of two sort of divergent views on this, that inflation is going to moderate, and basically all of the rate increases by the Fed is just going to crash the markets. So then now we're into the sort of deflation play. And then the other is that they're going to raise rates. It's going to cause a recession, but inflation is going to still be raging, in which case we're in sort of a stagflationary environment, one that we haven't seen since the 1970s. So I'm not really sure how that's all going to play out, but I just want to say I did pick up some more gold, both stocks and an actual. I bought a half ounce. I said in my prior video that I was going to go for it, and I was gonna pick up a full ounce, but I needed to save some money. I needed to put some on some bills and stuff like that, and keep a little bit of cash on the sidelines. So I had to go for the half ounce and pay a little bit of a premium. Part of the reason why I have some bills to pay is because I picked up some of these pennies. Again, I kind of get stuck into these hammered pennies. This is an Edward the First penny. No, I didn't pay $195 for it, but just thought I'd add that to the collection. And this is from the year 1272 to 1307. Really cool coins. Here's another one. This is a Henry the Third penny, 1216 to 1272. And this is probably, I'm going to try to get this is probably my favorite. It just looks so cool. These are old pennies, silver pennies. And I got another one. This one here is, where's the face? It's sort of hard to make out. These old hammered coins are there. That's kind of a pretty good picture. And I'll kind of flip that around. Yeah, so yeah, I had to pay the bill for this. Some of these coins that I picked up. But yeah, so I've been adding in my collection some of these hammered coins. This is that Henry the Seventh Groat. Um, and I've just been finding them really unique, really interesting, and basically conversation pieces. These are so cool. I'm just amazed. I got a short cross John, King John. Um, yeah, so I've been kind of having a little bit of fun lately, um, enjoying my collection and enjoying kind of watching this carnage unfold in the market. As I said before in these videos and on my blog, I've been preparing for this since 2020. I realized, in 2020 I bought the dip like everybody else, and but I realized, that was just kind of pure luck. And I got thinking back on my investing journey. Um, that really started hardcore in the ashes of the 0809 recession, great recession, global financial crisis, and that. And honestly, like, if you've been investing the last 10, 15 years, you've had a huge wind in your sails in the form of, extremely loose credit conditions. Like, we've been in kind of a credit expansion. Banks will lend like crazy on anything, um, and record low interest rates. So, and, all of this has just pushed asset prices to, crazy high levels. I just wrote a post on this on my blog, My Road to Wealth and Freedom. Check it out in the link in the description below. Um, if you guys want to go check that out, have a good laugh. Yeah, that's just kind of what I think, and I honestly don't really care anymore how any of this really ends up. I feel like I've done my part to try to kind of, warn people what's coming. Not that I know for sure, but I guess just warn people of, the risk out there. There is a risk that, all your stock investments are going to decline easily 50%. I don't think that's too far of a stretch. The Nasdaq's down 33%. That's the whole index. You know what I mean? The S&P is around what, 22, 23% or something like that. I mean, I don't think it's a huge stretch to say, hey, you know what? And we're still higher than we were pre-pandemic in all these markets. So I, in the COVID low, we saw about, I don't know, 2100, 2000, something like that on the S&P 500. My guess is that's where we're going. In the great financial crisis, it went down to 700. It depends. The thing is on the way down, it's way more, um, it's way more problematic, and things can really kind of get destroyed because of the amount of margin debt, the amount of fear and panic. Um, if you bought stocks on margin, or if you took out a HELOC and invested, just kind of look at what's gone on over in the crypto world. These things are collapsing, and people have lost everything. That's what happens in these type of situations. And my guess is we're going to start seeing some real damage in the housing market. People are going to go to market, start trying to sell their homes, and it just kind of, you get these price spirals. And maybe central banks will backtrack and try to save the day, and maybe that won't work. Um, I don't think the argument is that, like, they won't try to undo some of the damage that their policies have done. My point about risk is just that the amount of debt in the system makes it really, really difficult to avoid, walking into sharp objects. If they tighten, we crash. If they loosen, we get crazy inflation. Um, this is a very, very difficult position for everybody to be in, really. But those are just some of the risks out there. And my boogeyman for the longest time was deflation. That's why I paid off the mortgage and, stash some cash and start stacking some precious metals and stuff like that. Um, I don't have any leverage at all. I buy stocks or Bitcoin or gold and that with cash, like money that I have. I don't I don't want to have any debt on any sort of investment or hedge, insurance policy, whatever. Um, just because I don't want to be in a position where I suffer because something happens, I get called or I chicken out. Everybody on the way up, everybody claims that they can take a crazy amount of risk and they're okay with volatility and really high risk. It's easy to take, it's easy to be okay with taking big risks when you see Bitcoin go from 5 grand to, I don't know, 65 or 70,000. And you see stocks go, you see an index go from 2,000 to 4,800. Everyone can handle that. They're okay with risk. On the way down, it's completely different. People get wiped out and they panic and they sell. Um, those are just some of the risks that I see, and it's just kind of more of the same. Like a lot of uh, this kind of investing approach, or not even sort of it's just more like an approach to personal finance. It's just very common sense stuff that I feel like we've just lost as a society. Um, I'm not a huge cheerleader for Dave Ramsey by any stretch, but I do kind of agree, I guess, with his approach, and with his message. I guess he's just saying, don't take huge risk. Um, and that's the other thing too. It's just I find like a lot of people around me, they're always kind of bragging. Oh, I made this much money. I did this. I did that. And it's just like they don't really realize, like, I don't like to take a huge amount of risk. I like to think I've done okay, but honestly, I'm probably a terrible investor and don't ever take anything I say or do as financial advice. But I feel like, I'm in a position today where I don't feel like I don't need to hit the home runs. And I guess I heard once, not that I'm trying to say that I'm like super rich or anything like that. I'm really not. Uh, but I do feel um, I heard somewhere like you only need to kind of get rich once. I kind of turn that into you only really need to kind of get sort of achieve a good financial position once, and once you do that, there's really no incentive or reason why you would want to jeopardize your position by taking these huge risks, be it using a HELOC to buy stocks, or even in a market meltdown. I got the question the other day. Hey, if stocks collapse, would you take out your HELOC? And I don't think I would. I don't have to. I don't want to. I would just use my savings, my cash sort of savings, and yeah, maybe I might get this gangbuster return if I take on a huge amount of debt and gamble it. But then there's always the flip side, and because that's what happened in 2020. Everybody did that, and it worked out, and that is fantastic. And anytime anybody takes a huge risk and it works out, good on you. But don't for a second think it's because you're some genius. If central banks hadn't have pulled out all the stops and governments hadn't sent stimmies and mortgage moratorium, rent moratoriums, and stuff like that, like mortgage holidays, and had they not done all these extraordinary things, it would have been like a horrendous collapse. So, you know, so far things have worked, and I'm very happy that things have worked, and I'm happy for everybody who's made a killing the past 2 years. But there are still these huge risks still exist, and as we're seeing on days like today and in the markets more recently, when these chickens come home to roost, they do serious damage, and it can undo a lot of the good and a lot of the profits that people had made in the past couple of years if you just simply choose to kind of buy and hang on and buy and hold and that. And markets change. So even companies that have been solid for 100 years can go bust, as we saw with kind of General Electric in 2009, or like Kodak in the year 2000. Things happen. Companies come and go, and there's no company. I don't believe there's any company that's strong enough to kind of withstand a lot of the challenges that are coming. Even things like gold and silver can lose their value. especially if we end up in like a huge cash crunch. Everybody dumps everything, everyone sells everything, including the kitchen sink. But a big reason why I think gold and silver to a degree are holding their own in this environment is two things. You have major currency crisis on the horizon in the form of Japan and Eurozone. You have high inflation, and if Western central banks like the Fed, Bank of Canada, Bank of England, if they backtrack on these interest rates, I think we're going to see gold explode higher. And at some point, I think the consensus is emerging that they're not going to be able to keep hiking interest rates. They're going to cause some serious trouble and even bigger problems. Then we're going to be in that sort of deflationary, um, concerns and crisis and that. So it's not a pretty position to be in, and I don't even pretend to know where things are going to go. But I do see these risks, and I need to prepare um, on the upside and downside. If we do have inflation, then you're going to want your commodity stocks, your gold and silver, and real estate. Things that have worked. Um, if it's going to turn into kind of like a crash and depression, then you definitely don't want to have any debt. You want to have some cash, and I would even say you do want some precious metals, because then there's the whole kind of counterparty risk um, that kind of enters into people's thoughts and thinking and that. So, well, that's it for today. I think I've kind of said enough, said my piece. Please help support the channel by liking the video, subscribing to the channel, and please help support, my thoughts and my work by checking out my blog, My Road to Wealth and Freedom. The link is in the description below. Share it around, comment. I love comments. I like, being challenged. I like people, letting me know, their approaches and what they're thinking about. And I truly believe, I learn more with these videos and with, writing and researching and interacting with so many different people than I would otherwise. So appreciate that. That's all for today. Thanks so much. Take care.